Time to talk about GE with analyst Nick Heymann. He is currently the Director of Global Infrastructure at Sterne Agee Leach, one of the longest-serving analysts on the stock. Nick, there was one point when you even worked for GE years ago. Let's talk about this outlook that Jeff Immelt provides investors every December. The past couple of years have been pretty interesting, right? December of 2008, GE was in the throes of the credit crisis, a pretty tough conference for Jeff Immelt. And then in 2009, a lot more confidence, opportunity. At the same time, though, let's look at this here. This is a question I have. Is Immelt too optimistic? Back in 2009, he predicted revenue of $176 billion. Back in 2008 for 2009, it came in some $20 billion under that. This year, it looks like he's going to miss his target by $5 billion. Is he going to be a little more conservative this time around, given that record?
I think so. I mean, 2008, remember, too, was the first time GE suspended guidance. And, you know, I think at this point we've shifted from, excess ebullience and enthusiasm to really being ultra grounded. An example was last week with regards to GE Capital's meeting. Very succinct, hour and a half, went through the whole thing. It wasn't 4.5 hours. It wasn't needed to be done every quarter. And so we've moved to almost less is more, and really shifting as well, rather to predictions about performance, actually about what we're returning to shareholders to drive the value of the shares.
So in addition to conservatism, perhaps, or a modicum of caution, what kind of tone do you think Jeff Immelt is going to strike today? What are the messages GE shareholders are going to be left with, whether they like it or not?
I think right now it's just really simple, definitive guidance as regards to when are we going to close Comcast, NBC Universal. That's an important factor. I think there's definitely an interest to make sure that we don't revert back to, as the cash balances have swollen, to excess enthusiasm about large acquisitions, transformational acquisitions. I think the investors are comfortable with incremental, smaller acquisitions.
How important is it for shareholders in your mind to get some news on those preferred shares held by Warren Buffett?
That's another good thing. Certainly, if we could get that $3 billion retired, that would be a first big step towards further aligning the capital structure with those of the common shareholders, because there's a very big dividend on that's payable to Berkshire Hathaway.
Well, and let's talk about the dividend as well. GE raised it by a couple of cents just the other day. How long do you think investors have to wait before they get more news of the dividend with the building cash balance? GE is nowhere near bringing the dividend back to where it was before they started to whack it away.
Not yet, no, but I think there's been a clear-cut decision to use the yield on the stock as the primary fulcrum to lift the shares. As you mentioned earlier, we've had some excess enthusiasm about prior guidance. There's an indisputable fact that if the shares are returning a dividend, a cash dividend, it's been approved by multiple parties, and it's not subject to debate, the mix, the earnings, the quality, the value of the finance versus industrial. So I think that at this point, one of the things people will be listening for, is there an opportunity for further interim quarterly dividend adjustments, or will we have to wait till the end of next year? Obviously, a key factor here is the quote-unquote complete fix of the finance sub. And once that's done, we can then return that 45% historical dividend rate to the parent, and that will allow the dividend to continue to grow independent of a more gradual recovery in the industrial side of the company.
Nick, thanks as always for joining us. It's a big day for GE shareholders. We know you'll be watching closely. Nick Heymann of Sterne Agee Leach on General Electric.